right. Hello, everyone, and welcome to the Wake Up Call Payments with the BankSocial team and Elizabeth Osborne from Great Lakes Credit Union. Thank you,
Hello.
everyone. Hey, hi, Elizabeth, and thank you, everyone, for joining us. I want to go around and just introduce everyone. Elizabeth, welcome. Thank you so much for joining us today.
Thank you. Yeah. Thanks for having me. So excited to talk about a hot topic.
Exactly. And Elizabeth, we're really grateful that you could join us. And this is something that we recently just did a payments webinar around. And we really are excited to have you here to share your insight. And we have from our BankSocial team, the rest of our team, our leadership, John Wingate.
What's up?
Becky Reed.
Live long and prosper.
And Liz Winninger.
Hey.
Awesome. So let's jump in. Let's start. So everybody has kind of joined us here to find out our perspective and kind of what's happening in the industry around payments. And then to dive a little bit deeper around why now, the urgency, and kind of the landscape. So we're going to kind of go around and I'm going to ask you guys a few questions. We're going to open it up a little bit to discussion. And at the same time, anybody that's joining in, you can leave a comment if you have any questions, or you can scan that QR code and send your questions ahead. So yeah, let's get started. So let's start around urgency and kind of where we stand now. Elizabeth, I'm going to hand this over to you. And if you can just tell us a little bit of why it's so important for credit unions now to pay attention to payments.
Yeah, so if anyone here has attended a conference recently, I guarantee multiple topics have the word payments in them. So it's a subject we all are aware we need to keep an eye on, but it's really hard to find institutions that are like, oh, we know exactly what we're going to do. So it's a journey. We're all trying to learn more, understand what our members need, et cetera. And if anyone looks at the data, look what your members are doing today, how they're behaving, the systems they're using. It absolutely tells the story that this is a subject and a topic we've got to get ahead of and need to take action on. So I think the topic is extremely relevant, very timely, and I'm hoping everyone here feels the need to take action immediately like I do.
Yeah, perfect. And, talking about why payments are no longer just a service, but a strategic anchor for loyalty.
Yeah, so I think when someone would refer to payments, even for myself, I'd always just think of the transaction, right? It's a transaction. You have funds moving from one institution to another institution, et cetera. And over time, that's really evolved. And if you then think that what members are using today, the average consumer has 14 apps on their phone for financial institutions. So think about how many of those apps they're using to move money, right? It's quite a bit. You have the Venmo and everything that's listed on here, right? You've got like the P2P platforms, the A2A platforms, the different financial institutions. But our members, their expectations have really changed. And so and I just had a conversation with our CEO, Steve Bug, about this. And I was like, I think the key word here is if we do not get ahead of payments, we will no longer be relevant. And then loyalty is an impact. And here's what really gave me some of that insight. I started looking into volumes. So let's think about one P2P platform. I'm sure all of us have used Venmo at some point, right? I know I use it with some of my friends and family often. In Q1 of this year alone, Venmo processed $75.9 billion in payments. And that is a 10% year-over-year increase. They have 92 million active users. That means people that actually log in. They signed up and then they're using it. 92 million. So guarantee your members are using Venmo. Cash App, I was blown away. Cash App is something that I just wasn't as familiar with. I haven't used it myself. Well, same time frame, $56.8 billion in transactions. 25 million active users. Guess what? 60% of those transactions are Bitcoin transactions. So your members are using it. They expect immediate, instantaneous payments, but we're not providing it. So keywords to think of: fast, secure, so security, and seamless. That's how you keep them engaged. That's how you build trust. Because what we have today, like I know at Great Lakes, we have bill pay, we have Zelle, that just isn't going to cut it anymore. And so we've got to think about this. Payments overall is a total service that we've got to think about really comprehensively.
And how about from the team here at BankSocial? Do you guys want to weigh in on what you've seen and kind of some insights around payments?
I'll start real quick. One of the things that I talk about all the time when I'm speaking to credit unions is that credit unions today, and really all financial institutions today, we're payments companies. We facilitate the money movement that facilitates the ability for our members to live their lives. So when our member gets a direct deposit or puts their money into the credit union, they are using that money to pay their rent. They're using that money to buy groceries. They're using that money to pay their friends. And some credit unions might say, well, we do loans. Well, absolutely, we do loans. But at the end of the day, it's just a payment. I'm getting a loan to pay somebody else, whether it's a credit card and I'm using it to buy things with on a line of credit, or I'm getting a car loan and I'm giving that money to a dealer in exchange for a car. And so all we do is payments. And right now, the payments landscape from a user perspective, from a member perspective, is very confusing and siloed. And it's even worse, guys. I can tell you personally, it's even worse on the backside of a credit union. When I'm working in a back office dealing with payments that aren't talking to each other, that are old processes. We have a chat that came through. I can see some of the comments people are making, and they're saying, oh my gosh, I love doing business with my credit union, but the digital experience is crap. It's not good. And so I want to do more with my credit union, but I'm forced to go to Cash App. I'm forced to go to Venmo. And by the way, guys, where are those deposits sitting? I put $100 in Venmo and I keep it there just in case I need to send my sister $10 for the pizza she bought for me last night. But that $90 then that's in Venmo, it's sitting in Venmo's bank. It's not sitting in my financial institution anymore. It's sitting in. So now I have, Elizabeth brought up a great point, 15 different apps that are doing 15 different things. It can all be done in the financial institution, and it should.
Well, look at what they're saying here. They're literally saying, I'm going to read it. I would love for my CU to have an offer to compete with Robinhood, Venmo, Cash App. If I had one app that did all of that, I would mucho love my CU. That's an exact quote.
Yeah.
Exact quote. And really, this is what we see generally across all spaces is nobody wants, I'll just speak personally for myself. Forget the 5-6 people here that are saying their thoughts. I don't want 6, 7, 8, 10 apps. And that's why the convergence of all these solutions into a single interface or into a few interfaces is what really financial institutions, namely credit unions, need to be focused on, because it provides that experience that creates loyalty, that creates stickiness, right? Like our embedded investments platform, the embedded payments platform, the embedded wallet platform, all these provide stickiness. We see people come back hundreds of times per day to their app to use it, to their digital banking app to use it. And it's because they trust their digital banking app. They trust their credit union already. So trust is a big factor that you have already built with them, and that you can additionally amplify and leverage to drive further experiences into that member's life that help impact and that help drive more inclusivity, help keep more deposits at the institution. And really, we're seeing even now with some of the new features, bring more deposits to the institution. And so, I think people care about being local. People care about owning their financial outcomes, and it doesn't happen anywhere else except for credit unions and except for, within that digital experience that a credit union can deliver.
Yeah, and I would even add to that payments are your brand. So when we talk about P2P or these phrases that we all use, we don't care. Like my friend doesn't say, "Can you P2P me? Can you get me this amount at this time via here?" That's all she cares about. And so we're trying to educate people on what P2P is and RTP and all these things. And really we got to do that on the back end. On the front end, they just need to know that they can move their money securely, quickly, and at a cost-effective way. And all three of those things, I think, isn't the phrase like you can either be good, cheap, or fast, or I don't know if I have that right. But now we're seeing with technology, you can have all three of those things.
That's awesome. And actually, you guys touched on something that is really interesting. One of our interns right now is doing a study on campus. She's basically trying to understand why someone would choose a bank over a credit union or any type of financial tool. And one of the big questions was payments. And for them, not understanding anything about any of this, they're like, why? Why does my bank not have that? Like, they don't understand the tech behind it or anything. They just want to know why. And that is one of their biggest things. There's other reasons as well, but with payments. So I want to ask a few questions. So what's the biggest shift that you guys have seen with money and how members expect to move money right now? Elizabeth, I'll send that question to you.
Yeah, I mean, it's a natural transition. This is perfect because it's all about speed and simplicity. And even if you look at some of our competitive neobanks out there, like Chime, for example, they do a really good job of keeping it simple. When you open an account with them, you're just putting, an applicant knows, hey, I just have money and I need to put that money somewhere. So they open an account. There's not a lot of information about what kind of account it is. It's just open. And then they're able to really easily and quickly fund it and use it. Okay, so speed and simplicity. There's a reason why Chime's done so well. Venmo, Cash App, all these other P2P providers, they do it very fast and it is easy. Remember, who here has had to set up an external transfer from one financial institution and another? It is a nightmare. You need to know routing numbers and all stuff that no one knows. So then you're like, forget this. Oh gosh, do I have to write a check? Who wants to write a check? So that kind of stuff is just, it is not easy and it's not fast. So they're going to Venmo. They're going to these services. So that is the expectation. We've got to get ahead to offer it. And it's also expected. I think it's important to note the 24/7 piece of it too. Not waiting for those, the Fed to settle and our ACH to go through and all those things. You want to see that money move immediately and have access to it. So this is the new consumer expectation.
I would add one more S to that: speed, simplicity, and then security, right? Because a lot of these apps, once that money leaves, Venmo moves a lot of money, Cash App move a lot of money. We also, we see a lot of fraud in those systems. One of the main components of a faster payment system, I think a lot of people for the last few years have been saying faster payments, faster fraud. That's also not the case anymore, because the ability to layer in security into a single app is now something that you can leverage and you can take advantage of, so that you're preemptively stopping people. So those are really, to me, the three places where credit unions can win above all else, right? They've already got the money there. They've already got the loyalty there. By bringing the speed, the simplicity, and that security layer, credit unions will win. We're already seeing them win. We're seeing more money stay at the institution for longer. We're seeing more real-time payments coming in. I know you, Elizabeth, see tons of Venmo transactions coming in real time daily. And it's really exciting because the members are feeling the impact immediately, right? They're feeling the results and the impact immediately.
And all goes back to what you were just saying too, trust, right? So that's where credit unions, especially, we have that trust, but we don't offer the speed and the simplicity and that there's some gaps sometimes with security, right? So what an opportunity to pull that all together.
I think too, just to give some folks who don't work in a financial institution some insight into why it feels so disjointed. And it's because most financial institutions here in the United States, except for the very, very large ones, we rely on fintechs to provide those services for us. Generally, credit unions don't build those things natively for their one institution. And so, you know, you might use one fintech that does business account to account transfers. You might use a different fintech that facilitates your loan payment origination. You might use a different one that helps your members pay bills.
Didn't one have 62 different vendors to move money, Becky?
I mean, it's a lot. We had one institution, it wasn't quite that many, but it was in the dozens to in the 20 range, just around payments, because there are fintechs that specialize in just one specific area. And that's why when you open up your app, you see all 10 different ways to send money, because each one of those is a different fintech on the back end. And from a consumer perspective, a member facing perspective, it's like, why the heck is this so complicated? But that's why. And I think we can do better, which is why BankSocial exists.
You know, I see something here too. Somebody talking about, you know, the younger generation and their propensity to want to be local, want to have a community, want to help each other. That's why social media really took off the way it did. And so by bringing these types of solutions into the institution, not only are you bringing trusted tools in, but you're bringing in these younger generations who care about being local, who care about helping their fellow man. I mean, again, I'll just this is a quote that just came in. You know, young want to support local and not big corps. I mean, we see this all over the place. And really the barrier, there's really just one barrier. It's that ease, it's that experience. You know, they're the Amazon generation, right? They're the Facebook generation. They're used to pushing a button and getting what they want instantly. And how do we do that in a way like Elizabeth, you were saying, that's safe, that's you know, speedy, and that has that great experience, all wrapped into one thing. The Gen Y, Gen Z, but also something that is simple enough and intuitive enough for your existing member, right? My mom, who's you know, coming up on 70. How do I put something in her hands that she just pushes a button and she doesn't have to care about the 15 different ways to move money? You know, I won't name the bank, but there's the big bank that I have to help her do her you know, money movement all the time, because there's 20 different ways to do it, right? And customers and members and consumers they have the expectation, and it's the right expectation, that it's not that hard anymore to do these things. It shouldn't take that many buttons and that many features to do these types of things. It should be the norm nowadays.
Have you guys, I hadn't heard this phrase before, but recently someone said payments are plumbing. Payments are just plumbing. And, you know, each year, especially this time of year, we're starting to see what are the trends that we're going to be talking about at the strategic planning sessions. Going back to Elizabeth's comment, this should be your topics. This should be one of the number one of 3 topics that you are talking about at your strategic planning sessions.
I say the same thing. And I get, you know, I travel all over the country speaking to credit union boards, credit union executive teams, and at conferences around what the Genius Act really means for financial institutions. And, you know, here at BankSocial, we have always viewed cryptocurrency as a payment rail, as a payment mechanism. There's many other things you can do on DLT, but payments for a financial institution is an immediate use case that they can start taking advantage of today. And now that there's some regulatory clarity and even more to come on this particular topic, and we all know here the ability to do things on chain is just not available in the siloed, antiquated payments world in which we live today. And so the functionality, the capability, and there's even more than we can even think about right now that is on the horizon as people continue to build in this space. So once consumers really, so there was somebody in the chat that was talking about a farmer's market. I use that as an example all the time. So with our embedded wallet, you can use your crypto at a farmer's market to pay somebody for the strawberries that they grew in their backyard. So you want to talk about the epitome of supporting local businesses? That's it. I'm using my local credit union's app, who is they're bound to serve the community, and I'm a member, and I'm paying somebody in the community through my app in an easy, simple way that all I have to do to push a button that even John's mom would be able to accomplish.
You know, right before this call, I actually got off the phone with a former FBI agent and a current federal agent, and you know, we're talking with them about the capabilities that these new networks, these new payment networks provide relative to the old networks. And they are so optimistic about the future of combating and curbing financial fraud. And these are people who live it every single day, thousands of times with people who are losing their entire net worth, right? Millions of dollars, pig butchering scams and all these things. The ability and the capabilities that these new payment systems provide, and AI, layering AI on top of it. You know, when the FBI and the Secret Service and all these guys look at what we're doing and embedding this in financial institutions, they embrace it. They want to be a part of it. And so, you know, it's not just the consumers. You know, we look a lot of times at the consumer experience, but really that shiny button that we put inside the app, the capabilities that are happening behind the scenes and the advancements that are happening behind the scenes to protect and to offer those trust layers and that security layer, it is unmatched. And we're seeing it end to end. We're seeing it from the law enforcement side, we're seeing it from the consumer side, and we're also seeing it from the credit union operations and the employee side.
Okay, so thinking about that, what is kind of the barrier? Because we think about all of the great use cases here from a credit union's perspective. What is the real barrier that's keeping a credit union from being able to adopt this? So do we feel that it's culture, regulation?
Yeah, so there's always barriers, and so you got to work through it. But I think this has been a very constant discussion with our board, very open. You know, we're very fortunate. We have a great board of directors that is very interested in this. We were fortunate enough to have Becky Reed visit us last year, so thank you. She did a great job. Highly recommended, by the way. And but it's really, I see the biggest, because you can purchase technology, right? Regulations, that's another barrier. Regulations can be worked through, managed, change, etc. Right? Culture is the biggest challenge, because that you have to deal with several factors. It's culture both for your members and also for employees, because change is hard. It's hard to grasp it. There's many generations that you need to work through. That's the other challenge we have at Great Lakes Credit Union is, it's not always a one size fits all. Okay, we have members with different needs. We have members that are maybe less comfortable with technology, and those that are demanding, knocking our door, just like one of the comments Steve Rose just stated. Why aren't you out there at colleges bringing people on? Totally agree. We need to do that. So how do you kind of make them all happy and keep them happy? So I think it's a cultural shift that takes time. It takes consistent messaging. You've got to build I call them cheerleaders. I talk about this often. Find your people that get the vision and they can explain it. They've got like your elevator pitch. They can say it in 20 seconds, grab you, catch you, and then pull that forward. And so that's how that cultural shift happens, but it definitely takes time. So that's the biggest barrier I see really truly throughout credit unions and also banks.
I think too, we heard this earlier in a call John and I had with a credit union executive, and really an interesting conversation. Some of you might not realize out there that there are small credit union CEOs that actually do fractional CEOs for multiple small credit unions. Wow. You know, they might be the CEO for 3 or 4 different, you know, $10 million institutions. And we were talking to one of those guys that does that, which is amazing, and what a great heart for leadership in this industry to take that on. But we were talking about credit unions. This is a cultural thing from an industry perspective, Elizabeth. Yeah. Not many credit unions want to be the first one. They don't want to, you know, jump out there and either have backlash from their members, from the regulators, you know, whatever it might be, you know, that risk aversion, that almost extreme risk aversion. I actually have had CEOs tell me personally, I've asked my CEO colleagues and nobody's doing this. So why should we? And I mean, and it's a valid question, certainly. But I would agree maybe not to move forward too quickly if it was something that was kind of edge case. It was maybe out there that was, you know, not really well known or well recognized as being something that will be prevalent in the future. But we got to start somewhere, guys. So now,
well, the answer back to that person is you already are doing it. You're just not doing it in your app. They're sending the money to Venmo. They're sending the money to Cash App. So you're already facilitating real-time payments. You're just losing all the value, losing all the trust, you're losing everything, right? So by sitting back and letting that member take those funds somewhere else, you're still facilitating real-time payments. You're right in the middle of that flow. Trust me, we can go into your core and show you how right in the middle of that flow you are, right, with core data. So you're already there. You're already facilitating it. So it's just a change in perspective of how you view, you know, are you just going to sit on the sidelines and let it happen through your core, through other apps, or are you going to bring that trusted experience into your ecosystem and be that one-stop shop? You want to be that primary financial institution? You got to start. I hear that all the time. It's like, we want to be the PFI. It's like, okay, how much money is leaving via real-time payments, third-party apps? Okay, well then they're the primary financial institution because all the money's going through there. So how do you reverse that trend, bring that back inside, and not just be a facilitator in the loop, but be the facilitator of the loop? Because you can layer on so much more trust, so much more security. You have so much more data about the member and where their money's come from and where it's going. There's so much you can do to impact a member's lives when they do that transaction with you versus out there in the wild by themselves, all on their own.
And so some of the things that we hear are, is it secure? Or from our credit unions, it's not secure. I'm worried it's too fast. I can't stop it from happening. It's not secure enough. So somebody had a really great question, Rodo, in the comments, and I'm actually going to pitch that over to John. And then also, John, I wanted to highlight something that you had said, which was, it's already going out. You kept saying it's going out. You're already facilitating this. As an institution, how do you know what's going out? What are the data points that you're pulling from your core to know where that money is going? And that's a really easy pull, right? You pull an ACH report and you go through and you just do some tags through it. So it's not a difficult thing to start your research here and to create some focus groups or on your board to say, where's the money going? And that's the technology that we need to have in-house so they aren't leaving. So John, could you speak to some of that money movement and what you say when someone says, oh, I just don't think it's secure. The money is gone and I can't do anything about it.
Now, there we go. We see, millions of dollars in fraud across ACH, right? Speeding it up doesn't really facilitate faster fraud. What it does is just eliminate your ability to service the way people want to work and the way people want to transact now. And so with the availability of new technologies, right? Like we looked back and we said, fraud happened a lot less 30 years ago when people walked in the branch. And that's because when somebody walked in the branch, I know John, I know Liz. That's not Liz. This person is asking for Liz's money, and that's not Liz, so I'm not going to give it to her. And as we've gone digital, and really as community banks, because they're relying on third-party fintech providers, they're kind of beholden to what these third-party fintechs, and a lot of them just have one component of a series of 30 things that have to talk together to facilitate a transaction. And so it could be right to think that in the old way, in the last 20 years of moving money, moving it faster doesn't doesn't expose you to more fraud or lessen the fraud, but it just perpetuates the fraud, right? All the fraud you've experienced is just going to keep perpetuating. It's not the right move to say, let's just add another rail. When you do it, you've got to add it with the consideration of how do I prevent all the fraud that's been happening, whether that's on ACH, whether that's on wires, whether that's on any other, whether they're sending the money to Cash App, how many investment scams or how many pig butchering scams and romance scams and on and on and on and on and on are being done outside of your institution with money that originated in your institution, right? And so there's a completely new way by layering these technologies in a single platform, for example, to eliminate to a high degree account takeovers, by doing facial recognition, by matching that to the ID they have on. We have a patented solution that does all that. It goes back into your deep storage solution, pulls out the identity, does a real-time facial scan, and with machine learning, just in a few seconds for fractions of pennies, decides that just like a teller would do 35 years ago, that's not Liz. I'm not giving Liz's money to this person or allowing her to do that. But then even more sophistication behind the scenes with, we've seen transactions where accounts have opened months before our platforms were put onto a core, and our AI systems are identifying transactions that happened in the first 3 days that were doing transaction structuring and behavior at odd times of the day, and this turns into identifying other accounts that were mule accounts, and so there's so much that you can do when you layer this all within a single platform, and you don't spread that out over 15 or 20 or 30 different vendors. And so forget about faster payments, faster fraud. It's already fraud. They're already getting pig butchered. So you need the sophistication of these tools to deploy now on your existing payments. Forget what's coming. But how do you do that in a way that doesn't make you go find 5 more vendors, and then when you're ready to jump into real-time payments, find another 5 vendors that you now have to connect to the previous 5 vendors? That's just not the way that future technology should work, and that's not the way that we've architected and built our technology.
I saw a question come through, Elizabeth. I'd like you to answer. So someone is asking about how was that transition to real-time payments? What did that feel like as an institution with your team?
Yeah, so I think of it as very twofold. So you have the member side. So we have gig workers, we have members today that already would benefit from receiving their paycheck that day, right? Who wouldn't like to receive their paycheck that day and not have to wait for next Friday or whatever the case? So we knew that was a great opportunity. And so that was the benefit for them first. So when we set up Receive, that meant that those members that used to have to wait for their paycheck to then settle and be available to them were then seeing their payments instantly. So that was a huge benefit. We received really great feedback on it. The other side is your back end. So for those that are financial institutions on this line and listening to this call, you then have to just think about how do you kind of adjust your operational processing, right? It's a different file that you get from the Fed. It's a little bit different balancing, but it's simple, right? It's real time. It's same day. So you get it. You just have to be prepared for it. So our experience with BankSocial getting it set up, super easy. Everything, especially RTP, that was a breeze. But we're live with both. And so we currently receive both RTP and FedNow through those rails. And then we're in the process of getting Send ready for our members. So that's a huge benefit that, frankly, we need to do right now. It's just got to make the time. So we're getting there.
I think I do hear, thank you, Elizabeth. Me personally, I can tell you that when I first heard about real-time payments from the clearinghouse, I just thought you were pressing the batch button more times a day. Literally, that's what I thought it was. And I was like, well, I don't want to do that. That sounds really painful. That is actually not the way it works. It's a completely different messaging system. It is not batch. And it is real-time settlement, immediately instant, and it isn't clawbackable. So when it gets there, and I think that's what has people scared a little bit, because they're like, oh no, you can't return it. But on the other end of the spectrum, ACH can be disputed and in some cases clawed back. And so that means a lot of merchants and a lot of businesses won't even take it because of that. They won't accept an ACH. We have a vendor we use that will not accept an ACH. They'll only accept a wire. And so it's like, oh my gosh, now I have to do something even more complicated and more time consuming and more expensive just because the ACH rails are not reliable for the person accepting it on the other end. And so it really does settle in real time. And so because of that, guys, the balancing process, super simple.
Much easier. And frankly, I think wires, you're going to see that slowly fade away, because why even have that? So wires are clunky themselves, right? It requires all these authorizations and approvals, and you have to have the right systems. Real-time payments, it's just, you're sending it and it's immediate. So wires are soon going to be a thing of the past.
Well, and the stable coins are going to facilitate that being gone even quicker, I think.
Totally agree. Yeah.
All right. That's a great kind of segue into what the infrastructure looks like now. And I know you said culture was one of the biggest barriers. So thinking about, where we've come from and where we're going, I think it's a, good opportunity for kind of education around some of this. Can we talk about the landscape, where we've come from, where we're going, where we are right now? Elizabeth, I'll start with you.
Oh, yeah. Whew. So as the COO of Great Lakes Credit Union, I apologize because I didn't really properly introduce myself earlier, but hello, everyone. I'm happy to be on this call. I got thrown off at the start. So my teams oversee the operational aspect of it. So I have a deposit operations team. They run ACH. They have now same day coming in, right? They have real same day ACH happened a couple years ago. Real-time payments is in place. Right now, then you have all these new services happening. And so it's truly this evolution. Now for financial institutions, it's become much more complex. And this is the way I explained it to the board actually last night. So I was like, you have all these different payment rails that we're trying to manage and work through, all with different timing. It's become a challenge. So you have pay ahead, you have same day, you have instant real time, right? And then you have regular ACH. So all these different windows, and then you have to try to balance them and ensure that your debits and credits are going where they're supposed to. And wow, it has become a challenge. So really, when we think about what's available to us now through tokenized settlements in the future with stablecoin, wow, it's a game changer. It's going to, and AI, what BankSocial has introduced for this, it streamlines this entire process. So it takes those complexities and throws them out the window.
With AI especially, John, I was actually going to ask you about human-powered AI, because that's something that I think a lot of people haven't heard of.
I was going to, before we jump into that, I was going to talk about tokenization of assets, because it goes far beyond just payments. And so what do I mean? What do I mean by that? I mean that here very shortly, we have a number of credit unions coming onto our investing platform, where not only is that investing platform embedded in your existing digital banking, but somebody who's using our direct-to-consumer app can sign up for your credit union, and without selling their assets, those stocks, those dollars, those crypto, they can move those assets right into their credit union wallet without selling them. What is the biggest barrier? We had so many people that, so many credit unions that over the last several years have launched a wallet system, a stock system. And the behavior is, well, you got to sell those stocks, or you got to sell that crypto somewhere else. You got to convince them that the millions, or, that the hundreds of thousands or the tens of thousands of dollars they've had somewhere else take the taxable hit, right? Sell it, move the cash, wait days, move the cash back to your institution and rebuy. Yeah, not going to happen. Okay. And so what we've invented, and it's already working at financial institutions, is people are moving their stocks, people are moving their crypto from off the financial institution's purview or seeing, moving that right into their embedded wallet, right? Embedded. So this is what tokenization allows us to do, is to create an interoperability that puts your financial institution right back in the center of the mix, right? And we're talking about tokenizing even other bank accounts at other financial institutions, so that now you've got a more comprehensive picture. You put our robo-advisor on it. What kind of education, what kind of insights, what kind of ability to put new financial products in front of somebody that can help them in their life, depending on what types of things they're going through in their life. And that's the transition into human-powered AI, right? So a lot of people see AI as this thing that is going to take over jobs and get rid of jobs. I don't want to speculate. I can't foresee the future. But what I can say is that we're seeing a tremendous amount of uplift in outcomes and results when you pair AI with humans. And when you put a human, when you give the insights to a human that they would otherwise have to spend hours and may still miss or may still not get the full picture on, or they might have so much noise coming at them that it's harder to find the signal. By marrying AI with humans and by putting that human in the position to be that human to human contact with the member, but also putting all that insight in seconds, where no matter where they are, no matter how they're engaging with the member, that's when you create lasting relationships, right? And the ability for that, regardless of who that person is, if they're having a bad day, if they're having a great day, if they don't understand what's coming out, the ability for those AIs to adjust, to augment, but to still deliver that impactful message that then can be related to the member, or that the member could then engage with directly. It's creating outcomes and results that we've never seen before, because it allows people to connect with greater insight, with signals that break through all the noise and impact and create results more immediately, and that are more repeatable. How do you put your best compliance officer in front of every teller, right? It's so hard to do that. It's impossible to scale that. How do you put your best operations analyst in front of every back office accounting team, right? How do you empower your teams and your members to more effectively navigate their financial lives, whether they're an employee, whether they're a member? And that's really at the bottom of what empowers all of our platform, is this human-powered AI, Sara, that you were asking about.
Okay, John, so every time you speak, you tell your stories, I'm always like, oh, you get so excited. I get so excited at what you do. A lot of us say this. It's like, I need the, the emoji with the brain blowing. Yes. Okay. I just had to say it.
I mean, it is exciting. That's the part about human-powered AI that I think is really interesting, is a lot of people think AI is something that's bad. It's something that's going to kind of take the world as we know it and turn it upside down. But once you actually start utilizing it, you realize that the human element is something that AI is never going to replicate. And it's absolutely necessary for AI to be used to its, most potential. So I wanted John to touch on human-powered AI, but I also wanted to talk about when an institution comes in and maybe they're starting to offer payments. How does this change their operating model? What is the shift that happens there? What are the benefits in them using this over, as we talked about, ACH wires and the traditional payment methods that they were using before?
Yeah, can you kind of expand on that a little bit?
So how does it change the internal model of how they're operating? So once they're, for example, partnering with BankSocial, how would that change the operating model for a credit union?
Yeah, so credit unions, for us, what we've done is we've taken a hard look at all of our different partners and vendors and how we receive and send money today. right? So a bank and a financial institution, you have money inflows and outflows throughout the day. And we're looking at it, we have it starting at 7 a.m. all the way to 7 p.m. just from the Fed, and multiple files throughout the day. So you have to take a hard look at what's coming in, what's coming out, and how can they be replaced? How are they impacted? And how do you adjust to it? And I firmly believe that it happens with great technology. You know, you have to have the technology and the like agentic AI, like what's been developed to help complement that process, because your internal processing really does have to adjust. It changes anything from your operations teams that are on a daily basis processing these files and make them available, to your support teams that are answering questions to members, to your finance and accounting departments who are trying to settle with all these. So you have to really think, and you have to develop a roadmap. So first, do your homework, figure out who are you working with today, and then create that roadmap of how you make this adjustment, and really think through the financial benefits, the reputational benefits, the member benefits. It's frankly an easy business case to make.
And just to enhance on that we built these solutions to be end to end, give a credit union, big or small, the capability to enhance and simplify their current operations. Or if you're not big enough, but you still know you need to innovate, we built all the back office systems and all the human support systems, the white glove, the white label systems, so that you can turn on these experiences without having to create a single expert in your institution, without having to retrain a single employee in your institution. Ability to instantly create those impacts and those outcomes that drive those member experiences to the next level. But, you know, for a credit union like Great Lakes, they've got great teams already. They've got a whole teams working on things. And so we work to provide them, as they look at their payments roadmap and they look at their current payments ecosystem, how do they create a roadmap that continues to simplify and enhance their ability to operate and provide those member experiences without adding complexity to their daily operations, to the employees' daily lives. That's a huge part of what we've focused on here, because that makes a tremendous amount of difference to the ability to serve in the community and serve the member with a better experience, with a different experience.
And something that Great Lakes has done very well has been to own the strategy around it. They might outsource some of the technology or outsource to partners, but they have a great QSO marketplace that they work with and have invested in, but they're not outsourcing the strategy. And by owning that, it allows them to be able to go to those regulators or their members, and they own the experience that's going on, and they're more confident in how they're able to approach it. And you might say, well, they're a really big credit union. For sure, big credit union, but we're not just seeing it in large credit unions, or banks. We're seeing it in institutions of all sizes who are really able to hold on to that strategy around their approach. Because if you are not owning this, someone else is. If you're not owning that experience, someone else is, like John was saying earlier.
Yeah.
But if you're not a big credit union, I think an important note on that too is, if you're a credit union like, several $1 billion, you've got a big team, you can own all or most aspects of this, certainly very easy to implement. Also, for a small credit union, you still want to own the strategy, but maybe you can't own all aspects of the implementation or all aspects of the discovery. We've built the solution so that it's modular enough, not just from what is modularized to plug into your button on your app, but also from an implementation, a deployment, and a support perspective, right? Giving all credit unions of all sizes the ability to, again, not have to become experts, not have to own every component of this. If you're a small credit union, you can own whatever components you want, up to really just signing the contract and getting it done. And we can bring in all the fractional expertise, the fractional support, the technology components, the human components, the AI components. So making the whole experience modular is really what set us most apart in the market, I think.
And I mean, that kind of segues into how can some of the credit unions that are listening in today, how can they start now? How can they take action now? Elizabeth, I'll volley this to you.
Yeah, absolutely. So I first task all of credit unions, banks, whoever you are that are out there, take a look at your transaction file and dig into the data, because I guarantee it's going to shock you about how much money is leaving your institution. Just like John shared, Becky shared, we see significant dollars going to Venmo, PayPal, Robinhood, crypto, Coinbase, etc., every single month, and they're increasing. Okay, so if you hear a lot about in the industry, oh no, like our deposits are declining. Well, guess what? It's because they're in other apps. And if you have members with money in Venmo, it's not secured. And a lot of people don't know that. So that's also, it's not insured and it's not as secure, right? So that's also a good learning opportunity to kind of think through, okay, the trust and loyalty of a credit union. So do your homework, do your homework like I stated, figure out who are all your partners, how is money coming in and out today, what is the volume of funds leaving your institution, and how much, do a comparison, how much is coming back. Guarantee it's not equal, all right? It's going to be very lopsided.
Yep.
And then third is then really just kind of making that business case, pulling it together and start communicating it. It's an easy story to make. BankSocial is a great partner to help you with that transition, because it's a journey and it's going to take time and effort, but it's very feasible.
Yep, just have a plan. We have a saying here at BankSocial that we say all the time: think big, but start small. You don't have to eat the whole elephant, so to speak, right? You can start one spoonful at a time. I don't know how palatable elephants are, but just start small, but have a plan. One of the things we did at Lone Star Credit Union is we completely overhauled our technology infrastructure. And if we looked at the big picture of where we wanted to end up 3 years later, it was a monumental task, and it was imposing, and it was intimidating. But you know what? We started here. Let's start with this one place. And then when we get that done, now let's move to the next one, and to the next one, and to the next one. And I think that what is so awesome about what we built here at BankSocial, me coming from the smaller credit union space and understanding the limitations that we had, even from a staffing perspective, like what John and Liz were talking about, that we have created this environment where you can start small. You do not have to do 100% of everything that we make available on day one. You certainly can if you want to, but you don't have to. So just start somewhere. Pick one: real-time payments, crypto, whatever it is, just start somewhere, and then we can layer on.
Yep.
Start somewhere. We actually, the QR code here, if anybody wants to reach out, you guys can scan that QR code as well. We've gone through all of our questions. We have maybe 3 minutes if anybody wants to drop one, but I did want to mention for the credit unions that are listening, our community as well on BankSocial, who, as you guys heard, wants these types of solutions and are kind of begging for it. About last time I checked, almost 400 had tuned in to listen to this, because this is something they care about. This is something they're searching from their financial institutions, and they're not seeing it, but they want to see it, and they want to know, who's going to be one of the next.
Well, they are seeing it, because I have people reach out to me all day that are signing up at the credit unions that we have launched in, and I'm getting pictures from them saying thank you so much, because now I can be at a credit union where I want to be and do all the things that I want to do, and do it in a safe way, and in a way that puts it all into one app. So, but certainly we are seeing, Sara, people who maybe are in areas of the country that aren't supported by our current credit unions, who are asking for their credit union by name, right? But yeah, it's really exciting time to be alive in the world.
And these kinds of things, and again, coming from a credit union perspective, I as a credit union CEO, I really would have embraced doing this more with our members. I think that this is a great venue, a great opportunity for people to have input and get real-time answers to their questions, understand what roadmaps are, all of those kinds of things. But the appetite, and again, this is one of the reasons I wrote my book, the appetite for the decentralized finance generation, which includes all generations, actually, not just Gen Z, but also includes millennials and Gen X. They want to join a credit union. They want democratized financial institutions that they own. And so credit unions out there, start reaching this space. They want to partner with you. They want to be a member.
Yes, we actually just had someone write, how do I get my credit union to know about BankSocial and reach out and talk to you guys? So definitely we will send you that information so you can reach out to your credit union, get them to the right person. But we're always here at any point. If any other questions come up after this AMA, we're going to be doing more of these every Thursday. You know, we're live with the community. And every couple of weeks, we'll be on with a wonderful AMA roundtable like this. Elizabeth, thank you so much for joining us.
Thank you, Elizabeth.
Thank you.
Thank you, everybody.
Thank you.
Have a great
Thank you to
weekend.
everybody who tuned in. Have a great weekend.